What's going on, all of my Sofi hodlers? Welcome back to the channel. We have a lot to get into here in this video in a very short amount of time, so I want to get into it. We have some breaking news on a lot of different fronts to go over, but overall, Sofi had a great day today, but we might be in for a little more pain in Sofi as well as the markets here in the near term future. So let's get into this video. Only about 12% of you guys are subscribed to the channel, so if you are not subscribed, if you are a part of that 88% of people that are not, hit that subscribe button because you want to stay up to date with this information. Like the video as well and get yourself free stocks. Links down below in the description to do so for that. So let's go ahead and kick off this video with the obvious. Sofi was up 1% in regular trading, down 0.62% at the time of recording this video here in after hours. We are seeing a little bit of resistance as well at $10 per share. We are currently at about $9.65 per share. So we're going to have to see how that does hold up. Looks like we're seeing a little bit of resistance. I don't think it's going to be a huge deal, but we have a lot of breaking news to contend with as well as a huge catalyst coming on Thursday. So I want to get straight into that. We'll come back and talk about the technical analysis like we usually do later on into this video. But the breaking news today, if you guys are unfamiliar of this or with this, young Biden said, hey, Russia, we're no longer allowing you to bring your oil or natural gas to America. And this is really a deeply symbolic move because we don't import a lot of oil or natural gas from Russia itself. We just don't. But it's a big step in basically paving the way for a lot of other countries to do this. As far as I'm aware, it's us and Canada are the only two countries that have done this. And you do see Europe saying we're going to phase out Russian oil as well as natural gas by the end of 2022. But then again, Russia came out last night and said that if America does ban oil and natural gas imports from Russia, that they are going to take their own measures to basically jack the price of oil through the roof. They were talking about $300 barrels of oil, and that I guess that goes without saying that would not be a good thing. Not at all. So we're going to have to wait and see how Putin reacts to this here in the next couple of hours once that side of the world starts to wake up, because it is nighttime right now over there. So I do expect, some kind of retaliation to come unless Russia is just talking a big game and they're not going to do anything about it. I tend to think there will be some reaction from Russia overnight tonight, and that will definitely move the oil markets, which makes a lot of investors very, very fearful. On top of that, you did get this headline today that scared the hell out of a lot of investors. So it says Chinese companies that aid Russia could be shut down. U.S. Commerce Secretary tells NYT. U.S. could essentially shut down Semiconductor Manufacturing International Corporation or any Chinese company that defy U.S. sanctions. So now you're bringing China into it, and China is much more important than Russia as far as trading with America and American companies. A lot of companies, think Apple has a majority of their production over in China. If you start to shut down China, there's a question of, is it possible? Which it would be possible, but you would kill our economy. So this is going to have a lot of investors on edge, and that is why you are seeing the markets even down here in after hours, down about 0.25%. Very wild day overall, down 1.5%, up 1.5%, now down a little bit over 1%, and you're likely to see this volatility continue into the near term future, possibly the midterm future. Hopefully not that dramatic and that long lasting, but still it's a possibility you need to be prepared for. Now, you are seeing a lot of other companies coming out and leaving Russia. It says Coca-Cola suspends operations in Russia. Huge company, well-known company that does do a lot of business in Russia as well as any other country around the world. Ferrari and Lamborghini are suspending business with China. You also did see today Starbucks, McDonald's as well. Those two restaurants control over 2,000 locations in Russia. You also see Yum Brands, which operates a lot of smaller chains like Hungry Howie's, as well as a couple other ones that you guys know about that operate a couple thousand locations in Russia as well. Pepsi, pretty much everything at this point, American, has pulled out of Russia. And I think that's big for these companies. It's definitely going to affect their fundamental business and their earnings quite a bit. But the problem really is with our markets is when you start to threaten China, and when you actually do start to force companies that are American companies to leave China, that's where you get a lot of issues, and that's why you're probably going to see the market selling off here in the next coming weeks. We're going to have to wait and see, you know, how Russia and China respond to this, if China says something directly or not, and that'll definitely be another big catalyst. As far as some of the other things you guys need to know, like I said, we have a lot of data coming out on Thursday, including the CPI numbers. You have core CPI month over month. That is a high volatility expected event. You have core CPI year over year, and then core CPI index. You are also going to get initial jobless claims, which is another high volatility expected data point, and continuing jobless claims. And all of this comes out 8:30 on Thursday. So that's very important to know. We have a lot of data coming out on Thursday. You're going to see a gap down or gap up in the markets on Thursday before you ever have a chance to trade anything. So make sure you guys finalize your trades tomorrow if you have any trades playing the CPI data or any, you know, Russia-Ukraine situation that might develop on the same day as Thursday and compound to see a big market move. Make sure your trades are finalized by the end of trading tomorrow. And that's really what is going to dominate the headlines, this geopolitical tensions as well as this data point. Let's now get into some of SoFi actual specific data, and then let's get into the technical analysis, and then we will go ahead and wrap up this video. So if we're looking at the short interest, you do see 16.71% short interest of free float, 121.25 million shares that are sold short, cost to borrow max of 4.72%. So that is good because the utilization is 100%. So that means that institutions, hedge funds, they're not willing to lend out their SoFi stock for 5%. So if this number goes to 10% or 20%, how many hedge funds are willing to lend out their stock? That will give you a good gauge on how bullish or potentially bearish hedge funds are on the stock. It looks very bullish at the current moment. You are also seeing a lot of shorting happening to SoFi stock. Look at this. Borrowed shares of 12.21 million. That would be shares that are borrowed by somebody to then sell short. 12.21 million. Return shares of 1.42 million, and that is just for the day. So that probably explains why, you know, SoFi just kind of went up in the day and then went back down. A lot of that roller coaster activity. Right, we were up a lot more, over $10 per share, and then we kind of came back down by the end of the day, especially here in after hours. We were only up about 1 penny total for the day. So a lot of shorting activity that is taking place, and this does leave us vulnerable to see a short squeeze, which when you're not hoping and praying for a short squeeze, but it would be a good thing to get us back above hopefully $14 per share when eventually money does flow back into this sector that SoFi is in. But it could be a while, and that's the great thing about this community. And a lot of you guys, you're not in this for a trade, you're in this for a fundamental play, and you might make trades around, you know, a potential short squeeze if you want to. I know a lot of people do like to do things like that, myself included. The trades that I was calling out, that BP trade, let's go ahead and pull that one up. That was a killer trade. That's why you also want to be subscribed to the channel so you get access to that as soon as I make a trade and bring it to you guys. Of course, I don't bring all these trades to you guys, but I thought this one was pretty much a no-brainer. Up about 124%, about $226. I already made it free. Now I got 10 contracts for free worth $410. So pretty interesting right there. As far as the option activity, 7 orders for the day, totaling $1.98 million, positive order value of 66%. So even on a very rocky roller coaster day, a day where we were hardly positive, you did see a lot of overall bullish sentiment for the option activity from not retail, institutional investors. This is not retail investors. These are large trades worth a minimum of $30,000 or more going in one order. So that's not going to be your retail investors by and large, unless you are a big time retail investor. Yesterday you did see positive order value of 83% off of $7.45 million and 12 orders. Over the past week, 59% positive overall, 110 orders totaling $94.51 million. So you're definitely starting to see some of these dollar amounts start to pick up quite dramatically, and you are seeing that overall bullish tint to the option activity. So that is most certainly a good thing. As far as the max pain, that is $10.50 by this Friday. If you guys are unaware of that, when you buy options, whether it's a put or call, the market makers, they take about 90% of the back end of those total amount of contracts. So essentially, when you're buying a contract, it's usually a market maker that is selling you that contract, and they have to hedge out their positions in either which way. That's where you can see a stock fall dramatically because a lot of puts are being placed, or you can see a stock rally off of, the market makers having to hedge out their obligation after they sold you a bunch of calls. That is known as a gamma squeeze. I'm sure you guys fully understand what a gamma squeeze is by now, but that's essentially what it is. And the max pain is telling you, hey, this is the price where the market makers want to get the stock to by this Friday, and that is $10.50 to keep the most amount of your premium, to have the most amount of contracts expire worthless. So that's the situation as far as that is concerned. $10.50 per share. Who knows if we'll get to that by the end of this week. We might stay under 10, but we'll talk about that right now. So the way it's looking with the escalations, with possible, I think it's probable at this point, Russia to come back and, limit exports or something along those lines that do hurt, companies. China exports about 30% of the world's wheat, or about 35% Russia and Ukraine. So that's pretty much shut down. So even your cereal companies or any company that uses wheat, period, is now paying a lot more money for that wheat once their contracts do expire. And that's going to add to inflation. That's going to add to, fears of a recession, which I personally think is coming. It's going to make the CPI data a lot higher, and the Fed put them in a very bad situation. You're also going to make oil at the same time. It's going up, and it's likely to stay up. So a lot of different things that are weighing on the markets right now, and I don't see an easy way out of this. I don't think this is something that's really going to come and go. I think it's something that is going to stay with us for a while. Eventually it will go down and the markets won't freak out about it as much, but definitely watch those China sanction headlines. If we start to sanction China, that's really the clapping of the markets. That's what would happen. You would see huge down days in the markets. Our markets would start to look like Chinese markets, Japanese markets, or even Russian markets if it got really bad and the situation did escalate a lot. As far as SoFi specifically, if we can get above $10 by the end of this week and close above 10 by Friday, I would look at that as a very positive sign. If we do that, it should serve as a support level, and then we have to break out above the 13-day moving average, which is at $10.69 per share. The 45-day moving average is at $12.33 per share, and then the 200-day moving average is up here at about $16.54 per share. So I do think $10 will be that support level once we can break out above that. And then we have about another $1.50 we would have to climb from there to about $11.50 before we could even talk about a possible technical breakout or a reversal to this downtrend. You guys might be delighted to know that the RSI is just flirting with severe oversold territory. So inevitably we are going to see a bounce back up, and we are going to see some very green days for The stock likely, when we get more clarification from the Fed, if they're going to hawk down on interest rates, what's going to happen with that? Because with all of this external inflation, it's not a demand problem. It's not because we have too much demand. It's because they're restricting supply, and the Fed does not have any control about that and what happens around the world. So there's not much the Fed can actually do. So we might be in a weird scenario here where the CPI is very high, but demand is actually slowing down, but it's really these external factors. So the markets, they're either going to take that very bullish or very bearish. We're going to need some clarification from the Fed. And we do have that March meeting, March 16th at 2 p.m. And that's going to be very important. That's going to have all eyes on the Fed. Literally anybody that invests in the market is going to be watching the Fed on that day. And that will give us a better direction of how the Fed is going to operate. Now, like I said, CPI as well on Thursday. I cannot stress this enough. Make sure you guys' trades are finalized tomorrow before market closes, because you will not have any time before that CPI comes out on Thursday to make any other trades. As far as the volume is concerned, it's been going down just a little bit, but it's still really good at 50 million for the day. Today the MACD is pretty much neutral. So my daughter's been freaking out. It's been a very hard video to film, so I do apologize for that. I had to cut it out a couple of times. Nevertheless, thank you guys for tuning in. Thank you guys for watching. Hit the like button and subscribe to the channel if you have not already. Also, get yourself free stocks with Webull, Moomoo, and Public. Link down below in the description of this video, and get yourself some free money. So that's going to be all. I will see you in the next one.